Hello, I'm Richard Hunter and welcome to our look ahead for the week commencing the 28th of October. It's been a busy week past and we've got another busy week to look forward to. Certainly in terms of the US markets, they've ended up fairly flat for the week. The Dow Jones up 15%, the S&P 500 up 20%, Nasdaq up 23%. In the earlier part of the week, we had some positive noises emanating from US and China in terms of their trade spat. And reassuringly, for the most part, the corporate earnings season, the third quarter season, has been pretty good in the States so far. FTSE 100's had a pretty good week. It seems as though perhaps at last we're making some sort of progress on Brexit. There's also been the added froth of merger and acquisition activity with a bid which has subsequently been counterbid for Just Eat. We've also had some strength in the mining stocks on the basis that the Chinese GDP figure was not quite as bad as had been feared. And on top of that, of course, we had a recovering oil price, which has been good for the oil majors. More of that in a moment. So the FTSE now finds itself up about 8.5% in the year to date, which is a good improvement on this time last week. So turning to next week, very busy corporate calendar for UK companies. There's a few US ones as well, but certainly in terms of the UK, the banking season remains top and central. We've already seen some large provisions for PPI made by the likes of RBS, who put a provision of £900 million aside, Barclays 1.4 billion, and we're expecting a similar figure next week when Lloyds report, and in fact bring the curtain down on the UK banks reporting season. They've already guided that their latest PPI provision is likely to be somewhere between 1.2 and 1.8 billion pounds. On the plus side, they retain a dividend yield of around 5.5%, and their cost-income ratio is sector-beating at under 50%. More worryingly, perhaps, there were, when we last heard from them at their half-year numbers, a rise in impairments. Obviously, net interest margin remains under pressure, as does their return on tangible equity. So the news from Lloyds next week will follow updates also from the likes of HSB and Standard Chartered. Elsewhere, we're going to have half-year numbers from those oil majors, BP and Shell, see whether they have benefited over more recent times from that recovery in the oil price. We've also got updates from the likes of Next in the retail space, BT and International Consolidated Airlines, the owner of British Airways. And there's a fair clip of companies reporting in the States as well, where we expect third quarter updates as part of this season from the likes of Google, Apple, Facebook and Starbucks. Thank you for watching. Have a great week.